Hi, everybody. Welcome to our DAT IQ Weekly Market Update. This is our update for April 29, episode 337. I'm Dean Croak, market analyst here at DAT, along with co-host Chad Kennedy, almost dressed the same today again, and special guest Jarret Stowe. Welcome, Jarret. Great to have you with us.
Great to be here.
Yeah, Jarret, you didn't get the memo on the swag this morning.
I know. I'm over here. I've got Trucker Tool swag on. I didn't get the memo about the DAT shirt. Cool. Next time.
Yeah, we've got some pretty cool swag. We'll have to get you hooked up with the right stuff. Jarret, first time on our show. Tell us a little about yourself and for those that don't know you.
Yeah. Hey, everyone. Jarret Stowe. So currently director of broker product at DAT. I live in Brooklyn, New York. I've been in freight for about 3 years total, about 5 years, product management and logistics space. Kind of started off in last mile logistics at some e-commerce and healthcare delivery startups, and then transitioned over to Trucker Tools. Was there for about 2.5 years prior to that acquisition. Led the product team at Trucker Tools through that acquisition. And now at DAT, focused on all things broker product.
Makes three of us on the East Coast, which is good, all in the same time zone. Brooklyn's an interesting freight market. Do you see much about what's going on around you in the truckload market there?
Yeah, it's really interesting, right? There's all the restrictions, especially like going through the city and everything with the various like bridges, tunnels, etc. I feel like one of the biggest challenges for me is actually going to see freight brokers. There's a few of them based around New York City, but a lot of them you really have to get outside the city. It's always fun for me. Go travel a lot, go to the different freight hubs.
I looked on some of my freight tracking apps this morning. It's a bit of a ghost town over at the port this morning. There's very few large container ships in and a lot of tugs parked or tied up at dockside. So we're seeing a big drop-off in container ships right now. That'll no doubt flow into the broader market once we get a little bit further into this trade war. All right, we'll bring you back in a little bit later, Jarret. Let's start off with some of the key trends we're watching in our market update, and we'll bring Jarret back in a bit later along with Chad. Spot rates were up a penny a mile last week. Capacity tightened slightly. I wouldn't say it was a major market inflection. Load post volumes did bounce back as we head towards the end of the month. That would no doubt have been a factor. We have end of month finishing up this week. A couple of data points we saw pop out last week. ATA tonnage index down 1.5% in March. But the data for the first quarter suggested a turnaround was underway, emphasis on was, before the trade war. Transpac volumes are beginning to drop. We're starting to see container volumes down fairly substantially. The Port of Los Angeles Optimizer report says that volumes will be down by 31% year over year into the next 10 days. That's a big drop-off. International Road Check Week, don't forget, is May 13 to 15. The focus this year will be on hours of service and a new phenomenon called ghost drivers, drivers that don't have the right certifications or even CDLs completely. And of course, there'll be the usual focus on tyres, brakes, cargo, securement and couplings, although basically everything when you look at the list. This week's market update that will be out this evening at dat.com/market update. We're diving into the latest ATA tonnage index. May is strawberry month and that season starts shipping very shortly, and the latest residential housing data for flatbed carriers. All right, let's start off the market update with our load to truck ratio. Load to truck in dry van ended the week at 4.95. That was the highest in 9 years for week 17. Load post volumes bounced back last week, up 14%. In the refrigerated market, load post volumes up also for the third week. Produce season is starting to move the needle there. Load to truck ratio ended the week up 31% to 9.92, also the highest in 9 years. And in flatbed, after dropping for most of April, flatbed load post volumes reversed course last week, up slightly, only by 5%. Load to truck ratio ended the week at 35.37. Having a look at our year-over-year look at spot rates in dry van, rates are up almost a penny per mile to just under $1.61 per mile. Loads moved are about 3% lower last week. At that level, $1.61 line haul rates are about 6 cents a mile higher than last year and identical to the 90-day trailing average. On our top 50 lanes ranked by the volume of loads moved, carriers were paid an average of $1.89 flat for the second week. and 28 cents a mile higher than the national average. In our Midwest region, 13 states that move for about 46% of our national load volume last week, also has the highest correlation to the national average. Outbound spot rates were flat on a 2% lower volume of loads moved. Inbound loads moved were down by 2%. Also, in that Midwest region, carriers were paid an average of $1.79, 18 cents a mile higher than the national 7-day rolling average. In the refrigerated market, capacity tightened slightly. Also, national rates were up about almost a penny. End of the week at $1.90. That's the highest it's been in 2 months, though. Spot rates are about 4 cents a mile higher than last year. In the flatbed market, spot rates were mostly flat throughout April, although capacity tightened slightly last week. Almost a penny per mile was the weekly increase to just under $2.17. Compared to last year, flatbed rolling average 7-day rate is about 18 cents a mile higher for week 17. And for the first time this year, also 3 cents a mile higher than where we were in 2023. All right, let's have a quick look at our 35-day forecast using Ratecast. That's the green line. That's projecting what line haul rates will be out 35 days, over 550 miles excluding fuel. It's bounded by a couple of lines there. You'll see we've got a yellow and red. That's the upper and lower forward-looking error bands. And of course, blue is the rolling 7-day weighted average of historical rates. Let's start with dry van. We're seeing a significant improvement in the forecast this week, well into May. In fact, out to May 30, we're starting to see Ratecast pick up typical spring seasonal forecasting. I'm not sure how likely even the green is going to be, given all of the uncertainty in the market right now. We'll see as this moves on, but Ratecast is expecting rates up by 13 cents a mile to $1.75. That'll be 11 cents per mile higher than where they last year. My instinct tells me that the lowercase forecast is probably going to be where we land, given all of the uncertainty and some of the fall off in truckload demand that we're seeing. In the refrigeration market, today's forecast out to the end of May spans Mother's Day shipping, which begins this week in Miami, and some early produce volumes coming on in the southeast. Ratecast expects rates up 11 cents to $2.03 by the end of May. That'll end them about 7 cents a mile higher than where they were last year. I think the green is probably fairly accurate about where we'll land this year in the refrigerated market. And lastly, in flatbed, we're still seeing some super seasonal activity in that market. Ratecast is looking for a 7 cent per mile increase out to May 30 from where we are today. That'll end that forecast period at $2.25. That's excluding fuel. That'll end up about 21 cents a mile higher than where they were last year. There'll be some pretty good rates for carriers in the flatbed market. All right, so that's the spot market. Over to Chad for a look at the contract rate.
Thanks, Dean. As a reminder, everything Dean just covered is from a broker to carrier perspective. I'll cover everything from a shipper to broker and carrier perspective. So this is a new view. This is our van rates versus 2016. In orange, you have spot rates, and in blue, you have contract rates. This goes back to 2016 all the way on the far left. It's a monthly metric here for all shipper contributors compared to our 2016 static index. It's a static 2016 model. So you see all results pretty much hugging zero there in 2016. So this helps us measure change over time. And so one of the things I would point out here is since January 2023, there in the far right quarter of this graph, you can see the very seasonal spikes. You see the January spikes, you see the July spikes in the spot rates, and contract rates since October of 23, very flat. We've been in a very slight shipper contractual inflation market since March, up 1%. Sorry, this actually started to tip up in October. So it's been pretty flat since October. In February, we tipped just over 0% into an inflationary mark on the market, into the contract market. And March shaped up to be 1%. April's shaping up a little higher. Not all the data's in yet, but we're a little bit closer to 1.5% inflation. So that is starting to trend up. Typically with this view, what you expect as you look back through history is as spot rates cross up over those contract rates, you start to see alternatives and choices changing in the market, and contract rates start to follow and start to trend up a bit slower. The next few months will be very interesting as the major contract market starts to play out and those awards start to take effect. as we see any movement upwards there. I don't expect much though. So we'll go on to refrigerated rates next. You see a very similar trend here, and you see that big difference there between contract and spot right now to the far right there, where spot rates are lower than contract rates. We've been since November hugging just less than 1% negative inflation year over year on contracts with refrigerated freight. So for the last 6 months, bouncing right over there year over year at about 0 to just below 0% inflation for shippers. And then on to flatbed, hugging 0% inflation year over year. And you can see spot rates did over the last few weeks tick up over contract rates. So it'll be interesting to see how this plays out as we move into the late spring, early summer months. And then finally, I've got intermodal here, just hitting 0% inflation from a year over year perspective, but you can see that it's pretty flat, and this lags dry van by several months typically. That's it on the contract rates.
Yeah, Chad, at what point do you call it and say that all of the RFP negotiations and subsequent new rates that are entering routing guides have entered routing guides for the year?
Yeah, it's usually March, April where they start to come in, the bulk of them, right? So a lot of the largest shippers will start their RFP process back in the fall. By the time the awards come through and those tenders start to hit, it's usually March, April where we see the largest tick up. But I mean, we have RFP awards rolling out throughout the year. We do see a little bit of a blip up in that activity, but yeah, I mean, we're seeing about what we expected when we were surveying our customers last fall on the shipper side. 1 to 2%, first half less than second half. So these next couple of months will be very interesting to see what the spot market does, what the impact of these tariffs do, and I know you're sharing some really interesting information on what's happening on the ports on the West Coast. So
some of the earnings calls last week, the large truckload carriers alluded to bid season and some of the softness they're starting to see in rates. In fact, being very cautious about their earnings estimates for Q3 and Q4, which is kind of uncharacteristically normal. Normally, there's a lot more certainty in the market.
Yeah.
Anyway, let's bring Jarret back in. Jarret, question we asked Carrie last week to get the sort of discussion going. What are some of the new trends in truck and trailer tracking that you're seeing?
It's a great question. I think there's a couple things that I want to hit on, and I think one of them kind of waterfalls into a few other things. That first was really compliance versus consistency, right? If you were talking to our customers a few years ago, they'd say compliance is the number one thing, right? That was one of their major issues, is getting even a single ping on a load, right? You were talking about customers that thought 70% compliance was top of class, right? Now, more strict shipper requirements, right? You're having a lot of the shippers out there requiring high compliance on their scorecards, and just naturally compliance is more table stakes now. So you're seeing high compliance across the board, right? We have customers with 98% plus compliance on their tracks. So now they're actually focusing on that consistency, right? How high of quality are those tracks? Are we getting those geofence pings? Are we getting regular updates along the track? Kind of with that comes the focus on that ELD tracking, right? You're seeing more and more of that ELD focus in the market. With some of our customers pushing well over half their tracks are ELD now. I think somewhere between 60 and 80% ELD at this point. And even beyond that, right now you're actually seeing ELDs becoming more common. Now we're seeing that trailer tracking really start to pick up, right? With a few things like temperature is becoming more and more important for some of the big produce companies out there. Some of the big grocery store chains are starting to look for temperature tracking capabilities in RFPs, or require them from like even their inbound suppliers coming in. And the second piece is that cross-border piece, right? So you may change trucks, right? You may have 3 trucks as part of that cross-border track, one on each side and one across the border, but that trailer often stays the same, right? So being able to track that trailer all the way through. Similarly, you're seeing a big pickup in like power-only freight with those, like with the drop and hook load. So having that trailer tracking is really important there as well. So you're not getting false positives with that truck going in and out.
Right.
Jarret, with that compliance, do you expect that to be more challenging as the market tightens, if it eventually tightens?
That's a great question, right? Like when the market tightens, you're more willing to take that carrier at the last minute, right?
Yeah.
Then you're a little less stringent on your tracking requirements. However, I will say the shippers and the brokers in the market have kind of gotten to a certain standard that they're expecting, right? I think you may see a small drop, but I don't think you're going to see that big of a drop, right? It's kind of become table stakes in the industry at this point. And even as the market tightens, I don't expect it to see a massive drop.
Jarret, you mentioned geofencing. When you talk about geofencing, for those that don't know, give us a rundown of what that means and how you create a geofence.
That's a great question, right? So typically the way it happens is when we get an address into our system, right? This is an origin, a destination. It can be those interim stops. We'll take that address, turn it into a latitude, longitude, and then we'll automatically generate a circular geofence around that location, right? So you can actually set how wide you want that to be. And depending on the type of freight you're hauling, you may want it to be smaller or wider, right? If you're going to some of these big like mining facilities or some of these massive factories, right, they're pretty large, and you may actually half a mile may not even cover the full facility, right? As part of that, we also support custom geofencing, which has been really big for our customers. So especially if you have like major box retailers on the edge of an interstate, a lot of times that circular geofence can get tripped when someone's driving down the road. So you actually go in and draw a custom geofence around like the parking lot or the dock or whatever that is. And then you only get that alert when they come into that specific area and avoid those false positives. And then you can use those automatically based on the address.
Yeah, I remember in a previous company, I did a lot of manually drawing of polygons around locations because the dwell time or the detention time was missing where the trucks really were, which was typically just outside the fence. I remember I got into a fair bit of heated discussion with one of the large ports on the East Coast because they measure detention time or dwell time as in-gate, out-gate, whereas a lot of the trucks were sitting outside of the port gate for hours and hours. And I published this article and they jumped all over me and said, that's not accurate. And I said, well, it actually is accurate. You're not measuring what trucks are really doing. And of course, turns out that was one of the big controversial issues that were going on between the port and the truckers. So so you support, you talk about circles, but drawing custom polygons around a location is what you're talking about, right?
Yep, exactly. Yeah, it's really important whether you're on the edge of an interstate or, like you said, there may even be like a truck stop 100 yards down the road or something, and they stop at the truck stop, and then that triggers the geofence.
Yeah. We went through the exercise of geofencing all the truck stops and rest areas along all the interstates. So you could actually reverse engineer an ELD data feed without an ELD device, because trucks and trailers move at pretty much the same speed. It's very interesting data.
That's interesting.
Yes, Chad, you had a question? Sorry.
Yeah. Sorry, Jarret. So I was just jotting down some notes, and it sounds like there's several value propositions here. Usually when I hear tracking, I think service. Obviously, you guys have made a name for yourselves in helping to prevent fraud. That's another value proposition. And then you've got this dwelling tracking. I know when I was with a shipper, validating tracking of detention of trailers and power units was a pretty big headache. So there's multiple value propositions here. And then you've also got the risk side on temp control, right? Yeah.
Yep.
How do customers think about these and rank them? I guess it depends on who the customer is.
Yeah, that's a great question, right? I think the biggest one is that compliance and consistency, right? Just getting that tracking there, meeting their shipper requirements is really number one, right? Like they want to get an A on their scorecard with every shipper they work with. They want to keep that business. They want to keep growing the amount of business they get. The second piece is the fraud. I'm glad you bring that up. That's another thing that I wanted to mention. That's been a big focus for Trucker Tools over the past year. Just in the market, you're seeing fraudsters have improved tactics to try to beat tracking requirements, among other things, right? You're seeing this across the space with every like SaaS provider out there. Fraudsters are trying to find more and more inventive ways to beat the system. So Trucker Tools has been taking a lot of effort on our side to actually identify those and proactively alert customers when we see potential vectors of fraud, right? Potential indicators there. So what we do is whenever we get one of these reports, we dig into the load and then identify commonalities between all these reported loads and build out potential alerts that alert our customers both within their TMS system and our portal and via email to alert them to go check out the load. With these, we've caught people double brokering. We've caught loads that are being stolen. We've caught people who are trying to rail loads, right? They'll buy a burner phone with a VoIP number, throw it in a rail car and send it up the rail. People get really creative. So it's always fun to to be there and be pushing the boundary on what we can detect and what data we can pull from.
Sounds like a Breaking Bad episode that I remember. I don't know.
It keeps things interesting, but it's a lot of the fun, right? And we're out here trying to see how we can help our customers be more proactive. I think the biggest one that everyone in the industry, I think, is doing at this point is that VoIP phone number, right? So there are legitimate reasons to have a VoIP phone number. But if you're talking about a small carrier that you already had worries about hauling a load from LA to Chicago and they hit a VoIP number on there, that's a red flag showing up.
Yeah. I would think all this data would make ripe conditions for using artificial intelligence. Is that something you guys are starting to look into or already using?
Yeah, it's a great question. It's something that we're starting to look into to recognize these patterns. We're actually looking to roll out a product soon that allows you to more easily indicate that a load had some kind of fraudulent activity on it. So we can start to use those confirmations to build models and predict even ahead of some of these alerts that we already have predefined, like what potentially means a load has fraudulent activity on it.
Yeah.
This discussion reminds me of my days driving when I was working for a company called Quickers Air. We were hauling air freight, charging air freight rates, but we got busted when the altimeter never got above 8 feet the entire night. So,
it's funny you say that.
Yeah.
We track the altitude. We typically don't really we often haven't sent that out. We actually had someone come to us that were hauling potato chips, and it's extremely important for potato chips, that altitude, right? Because they go over a certain, it'll decompress in the back.
Yeah.
So
between Phoenix and Kingman, that's a no-go zone. That'll blow the bags up in a flash. I was thinking, I used to work for a trailer telematics company many years ago, and we estimated. And they had a couple of 100,000 trailers installed, a lot of the large truckload carriers. And we estimated back then about 20% of the trailing fleet had telematics. Latest data suggests it's something like double that, maybe even close to 50% of trailers have some sort of GPS location device. Does that sort of map to what you see?
Yeah, it's mapping to what we're seeing. I mean, I think trailer telematics, you're going to see that tracking adoption similar to the ELD adoption, right? There's going to be a curve there. I do think that curve is going to be much faster than the ELD adoption curve, right? We've been talking about the ELD since that mandate. We're just now really hitting that massive scale. I think you're going to see a much faster adoption with trailer telematics. And I think actually the requirements from shippers kind of coming down for some of this trailer data is probably going to push that adoption of trailer telematics devices on trailers even more.
Yeah, the data itself has value. I remember a previous company sold the trailer telematics data to a company that was providing real-time traffic alerts because the trailer moves at the same speed in traffic as a truck does. So it's actually trailer telematics data is incredibly valuable for lots of use cases, not just tracking where a load is.
Yeah, makes sense. So Jarret, now that DAT acquired you guys, you're over more than just tracking now, right? You're the product leader over all of the broker segment. Talk to us a little bit about what that means for you and what problems are you working on solving now?
Yeah, no, it's really exciting. Honestly, the two biggest problems I'm solving, I think, stay the same, actually, coming from Trucker Tools to DAT. I think there's just a slightly different lens. And those two problems to me are efficiency and fraud exposure, right? We want to increase the efficiency, allowing broker reps to spend more time doing the important things like building those customer relationships and handling those exceptions they need to handle while giving them and kind of reducing some of that manual work they're doing on other places. I think that's applicable on tracking, right? How can we improve that compliance, that consistency, so you're not having to manually call the driver? Same thing on the load board, right? How can we put the best carriers in front of you so you can call 5 carriers or you can get 5 inbound quotes instead of 50, right? It's like, how do we optimize your time so you can better spend it? And with that, I think you're going to see that fraud exposure reduce as well, whether that be the fraud toolkit on the Trucker Tool side, or whether that be kind of the carrier management suite that we've been talking about on the DAT side that's coming. So that's one piece. I think with the acquisition, it's really exciting because one of the most important things is to make sure each company keeps running, right? You don't want to slow each company down as part of that acquisition. I think DAT's done an especially good job of that, making sure that Trucker Tools and DAT are continuing to run and build products. Right, Trucker Tools has a few products that have recently come out with the fraud toolkit. DAT's been launching parts of that carrier management suite. And then I think the most exciting part now is actually seeing how we can make 1 + 1 = 3, right? Now that we have these two amazing data sets, these two amazing companies, how can we build a really exciting product between the two companies, right? How can we tell you when you're sourcing carriers in DAT, hey, that carrier is ELD integrated and they're a great tracking carrier, right? Reduce that worry when you're going to be working with a carrier you haven't worked with, that they're going to meet that high visibility compliance on that shipper that you're trying to source a carrier for.
Jarret, a lot of carriers are out there struggling, looking for ways to survive this year. What would be your best advice to a carrier in terms of using this technology and presenting themselves in the best possible way to a shipper or a broker?
Yeah, that's a great question. I think there's a couple things on the tracking side. I think if you're not ELD integrated, getting your ELD integrated, right? I think that's just the easiest way. It's going to automatically improve your consistency with tracks, right? Just by nature of not having to worry about settings on a cell phone or anything like that. It's going to naturally improve that. It's also easier for the drivers, right? They don't have to manually update anything on their phone. Just sets themselves apart, right? Also, it just reduces, especially if you're a new carrier, it kind of gives you a leg up, right? When you're facing other new carriers fighting for the same business, right? Generally, our customers prefer those ELD integrated carriers, especially when it's a new carrier, because it's just a level of confidence that they're not a fraudulent actor in the space. So I think on the tracking side, that's really important. On the DAT side, be on the lookout for some of the stuff that's coming out with the carrier management suite. I talked a little about finding on the broker side, right, that efficiency, but it's on the other side too, right? Like we don't want you as a carrier calling 10 loads that you don't meet some qualification for and can't work with. So how can we improve efficiency on both sides of the market, allowing you to find profitable freight to move and keep you moving there?
That's great advice. Thank you. Chad, anything else you got there?
Nope, I think that's a wrap for me, Dean.
Yeah, Jarret, any events coming up where we need to be sort of flagging you might be speaking at?
Yeah, great question. I'll be in Dallas for the FreightWaves Fraud Symposium on May 14th. So definitely catch me there.
Good. All right. Just generally speaking, if people want to contact you, how would they go about that after today's show?
Great question. You can always shoot me an email. It's my name, jarret.stowe@dat.com, or you can shoot me a message on LinkedIn. Always happy to connect and hear feedback. And yeah.
Good, great. Thanks for being on. On our Freightvine podcast, Professor Kaplis is talking to Jesus Martinez. He's a research scientist at MIT talking about environmental and sustainability issues. May is also Veterans Month at DAT. So starting on next week's show, we have Sarah Lee from Waypoint Vets. She's got a fantastic story, former military vet. We've also got Greg Ham from Werner Enterprises VP, Peter Caratola, CEO of Ease Logistics. Brad Bentley's on the show later in the month from Fastport. He's the CEO over there. So it's going to be a really good month focusing on vets and some of the challenges they faced in returning from war zones overseas and integrating themselves back into transportation and logistics mostly. We mentioned Roadcheck Week at the top of the show, May 13 to 15. That's just 3 weeks away. Make sure you set up alerts for our live show. Subscribe to our channel. With that, another show is in the books. Thanks for watching. Be safe. Be nice to everyone. We'll see you here next week at 10 a.m. Eastern, 7 a.m. Pacific.